Joining us, Niles Investment Management founder and portfolio manager, Dan Niles. See what I did there, Dan? You're welcome. Let's get to the big story right now, obviously, potentially is Nvidia, and this may not happen. I want to make that very clear. It was a journal story over the weekend. If Nvidia were to pull back or out of that $100 billion OpenAI investment, what would it mean, if anything?
Well, I mean, I think it shows you how the world has changed from September, but we kind of know that, right? In the sense that there's a reason Oracle stock is down over 50% from its 52-week high following that monster quarter they put up in the middle of September. So I think, what will be interesting is what the amount ends up being, because remember when that agreement was signed in September, it was for $100 billion, but it was a letter of intent. So they didn't necessarily need to follow through on that. And you saw in filings from Nvidia since then that they said, this might not ever get done. The CFO, CEO have said that in conferences starting as early as January, as far as I can remember. So this is not, in some sense, new news per se, but it does tell you that Nvidia clearly thinks a lot differently about OpenAI than they did in September of last year.
And what should, we were just talking about this, what should OpenAI do, Dan? I mean, you don't have to worry about it, I guess, because it's not a publicly traded equity itself. But if you're a Microsoft investor, if you're Oracle, as you mentioned, in some ways, if you're Nvidia, I mean, those are the chips powering their chatbot, whereas with Google, they have it kind of all vertically integrated.
Well, yeah, but Google does use Nvidia chips as well. So I think this comes down to what's been happening really since October 29th, before that 5% drawdown in the S&P back then, where if you look at the Google ecosystem of companies since October 29th, they're up about 25%.
Yeah.
If you look at the OpenAI ecosystem of companies, they're down about 25%. And some of the latest releases from Google just make me feel that much better that Google's going to ultimately be the winner in consumer AI, and Anthropic is going to be one of the winners in enterprise AI, and OpenAI is in trouble because they're wedged between the two of them.
Okay, so let's stay there. OpenAI, we don't know if it's in trouble or not, but if they don't get $100 billion, even by OpenAI standards, $100 billion is a lot of freaking money. Okay.
No, I think they're going to get $100 billion, Brian. I'm not saying they're not. I'm just saying longer term, if you are thinking about who the 1 to 3 winners are going to be in AI, I don't think they're going to be one of them. Are they going to raise the $100 billion? No problem. There's too many companies that have a vested interest, at least for right now, for funding. And so they're going to raise the money. It'll be interesting to see what happens to the stock prices.
They'll raise it and they'll burn through it, right? So let me ask let me ask a different question. In 3 years, in 5 years, if OpenAI is something totally different than it is now, it's bought. If OpenAI doesn't make it or is sold off or whatever happens, maybe it's the king. But let's say it doesn't. Will the stock market be okay? How much, if anything, is riding on OpenAI, given that it's kind of a black box, kind of a closed thing? It's not a public company. We don't know a lot about it.
A ton's riding on it because you know that they've made $1.4 trillion in commitments over 8 years. And they're going to lose money all the way through 2029. And the burns are going to get worse every year that passes until then. So, yeah, a lot is riding on it. But you're seeing the stock market, as I said, it's been adapting to this since late October. What I find fascinating today is you look at Oracle, right? Because they're obviously, when they announced that monster quarter back in September of last year, the stock was up 36% the next day. Biggest move in history for any company with a market cap of over $500 billion. But $300 billion, or almost 2/3 of the remaining performance obligations, were from OpenAI. So Oracle comes out this morning, says, hey, we're going to raise $50 billion, half of it in equity, stocks up, and now it's down. And so it tells you that people are thinking maybe a little bit beyond, okay, they can raise it for this year, but what about next year and the year after? And so it's never the data, it's how the market reacts to the data. Clearly this morning it was, oh my God, this is great. And now it's like, well, wait a minute. We still have the same problem we have before, which is their exposure to OpenAI.